Welcome back to our tactical portfolio update. I'm Michael LeBlanc, and today we're wrapping up June 2025, highlighting the global markets, the Fed signals, and what's happening in Canada. So let's get started. As always, these videos are for educational purposes only. Always reach out to us with any specific questions about your investment strategy, your portfolios. We're happy to take a look and give you advice, direction, and see what strategies are right for you. But let's jump into things. Let's start with the job market strength. June brought better than expected U.S. Job reports with 147,000 new jobs, beating the forecast of about 110,000. So unemployment dipped in the U.S. from about 4.1, dropped to 4.1 from 4.2. So small move there. Market's reaction. Basically, equity markets cheered. The S&P 500, NASDAQ, TSX, Dow all closed the month at fresh record highs. We even saw the Treasury yields and U.S. dollar climb slightly on that news as well. What we're really, we continue to watch. We're keep focus on the Fed policy. We're looking for direction as to where those interest rates are going to move. The U.S. Fed and Bank of Canada both held their rates steady in June. They did signal potential for rate cuts later if inflation cools off, but the strong labor market kind of dampened a lot of the hopes there for any kind of immediate cuts in the next couple of months anyway. In the service sector, services edged into expansion, marking the recovery from the trade war pressures we saw in April and in early May, helping underpin a little bit more investor confidence that this market rally might continue to hold. We did see tech and AI lead some outperformance. Big tech jumps back into the spotlight with Meta, Microsoft, and Nvidia outperforming where they had been kind of lackluster, certainly at the end of the first quarter and going into the second quarter. They've kind of surged back here at the end of May and going into June. Apple, Google, and Tesla all lagged a bit. Tesla maybe for different reasons, but Apple and Google still had good performance, but a little lagging behind the other big names who are more focused around AI. AI is still driving a lot of the technology numbers as they continue to see that kind of embody of where technology is headed. There's still a lot of evidence to remain cautious out there, especially when it comes to the more speculative side of the markets. We remain tempered by really taking a look at the valuations and the valuations risk in some of the names. So in June, we've seen we took some trimming opportunities in some of the names that had really rallied for us, like MDA. And a couple of our gold positions. So we trimmed some profits out of there. We put some money into a little bit more back into names like Allemand Couche-Tard, which grocery store or food, which continues to perform well. Loblaws is in there as well. They continue to good performers in the portfolio. Just haven't been the main focus for investors in June. And we're looking for those to keep us safe in a pullback. That being said, the portfolios, even with the continued strong cash positions we have in the portfolios, did keep up with the TSX numbers, which we'll talk about in a moment. The tariff tensions between Canada and the U.S. cooled a little bit, especially after Canada scrapped its digital service tax on June 29th, after some back and forth over potential new tariffs, U.S. tariffs, if we didn't do that. So after the U.S. suspended negotiations, they've come back to the table, and that's helped ease investors' nerves as we move forward. On the geopolitical front, though, we saw the Israel's attacks and strikes on Iran and back and forth, briefly lifting some oil prices and gold prices, pressuring a little bit on equities and bringing some volatility to the market. But overall, that we know there's a ceasefire, and hopefully those tensions are easing as we move into July and for the rest of the summer. Just on the Canadian front, as I mentioned, the TSX did climb about 2.6% in June, driven up mostly by, as mentioned, those gold and silver names. Metal giants like Lundin, Agnico Eagle, and Wheaton Precious significantly outperformed, making up almost half of the TSX gains. Energy stocks, though, underperformed as oil pulled back, offsetting some of those gains for the month, as we kind of see what's shaken out in the Middle East when we talk about energy there. Markets are continued to expected to continue to be volatile. As we do look at those the Fed policies and where they might be headed. Earnings, is on the forefront for the third quarter here. And of course, global trade headlines remain key drivers back and forth as the winds continue to shift when it comes to global tariffs and trade deals that are changing day to day. Earnings growth is still modest but steady, especially in the U.S. and U.S. tech and in Canadian metals. So that's holding things in strong. As far as the portfolio goes, we remain focused on quality and yield. So in the portfolios, one of the things that has helped it really outperform for June and for most of the year is we have a strong exposure to yield, whether it's through the utility positions, the banking positions. We do have exposures to those tech names and of course gold. So all that's been really great for the portfolios, as I mentioned. Despite having continue to have a heavier cash load, we did deploy a little bit of cash by adding a global defense position to the portfolio. We're seeing a lot of NATO. Obviously, NATO announced up in their investment into defense spending, and we're seeing that all through Europe, Canada, obviously in that group, and in the US. So as more countries continue to invest in their defense spending, and unrest continues around the world, that position should do quite well. Already off to a good start, but we just kind of added it in June. So those cash positions are still I should say high interest. We do have them invested. It's not just sitting in cash. I'm still looking for opportunities we can jump on in the portfolios. We still like it, given the volatility that's out there, and also that potential pullback in some of the big tech names that we did see earlier in the year, and we could easily see coming in the next couple of quarters. Anyway, with that, thanks for tuning in for a tactical portfolio update for June 2025. I'm Michael LeBlanc. Share your thoughts and your questions in the comments, or reach out to us anytime. You can go to mikeonmoney.com. All our contacts there. You can see it down below. With that, though, I'll see you next time, and take care.